A balance sheet is a financial statement that provides a snapshot of a company's financial position at a specific point in time. It presents the assets, liabilities, and equity of the company, detailing what the company owns, assets, owes, liabilities, and the ownership interest, equity of shareholders. Here's a breakdown of each component with examples. Assets. Assets are resources owned by the company that provide future economic benefits. They are categorized into current assets and non-current assets. Current assets. These are assets expected to be converted into cash or used up within 1 year. Cash and cash equivalents. Cash in bank accounts and short-term investments. Accounts receivable. Money owed to the company by customers for goods or services sold on credit. Inventory. Goods held for sale or raw materials used in production. Prepaid expenses. Expenses paid in advance, such as insurance premiums or rent. Non-current assets. Fixed assets. These are assets expected to provide economic benefits beyond 1 year. Property, plant, and equipment, PP&E. Land, buildings, machinery, and vehicles used in operations. Intangible assets, patents, trademarks, copyrights, and goodwill. Investments, long-term investments in stocks, bonds, or subsidiaries. Liabilities. Liabilities represent the company's obligations or debts that must be settled in the future, typically categorized as current liabilities and non-current liabilities. Current liabilities, debts or obligations due within 1 year. Accounts payable, money owed to suppliers for goods or services purchased on credit. Short-term loans, borrowings due within the next year. Accrued expenses, expenses incurred but not yet paid, like salaries or taxes. Non-current liabilities, long-term liabilities, debts or obligations due beyond 1 year. Long-term loans, borrowings with maturities longer than 1 year. Bonds payable, long-term debt securities issued by the company. Deferred tax liabilities, taxes owed in future periods due to temporary differences in accounting treatment. Equity. Equity represents the ownership interest in the company, often broken down into several components. Share capital, money received from issuing shares of stock. Common stock represents ownership in the company with voting rights. Preferred stock, typically non-voting shares with specific dividend rights. Retained earnings, accumulated profits that have not been distributed to shareholders as dividends. Dividends payable, amounts owed to shareholders as dividends declared but not yet paid.